Hello and welcome back. Welcome to Lesson 1 of Module 4. In this lesson, we'll explore the notion of profit and financial management of a social enterprise. To begin this lesson, we'll introduce some financial terminology which is required before delving into product and service costing. Throughout this lesson, we will look to understand the fundamentals of running the financial elements of a social enterprise. If you are not confident in financial management, this might seem like a daunting task, but this module aims to reduce any anxiety around money, financial management, and profit to ensure the success and long-term sustainability of your social enterprise. Financial management of social enterprises doesn't drastically differ from financial management of a traditional enterprise, and many startup programs or SME support services are often relevant to social enterprises too. By the end of this module, you will understand the significance of ensuring a strong financial plan from the beginning and feel much more confident in your ability to manage the finances of your enterprise. At any stage, feel free to pause the video to take notes, rewind to hear information again, or stop the video to complete a learning activity. Let's dive in. In this lesson, we will cover two topics, each of which have been designed to support your financial learning on the path to being a social entrepreneur. This lesson will cover the topic of financial terminology for social enterprises before providing guidance on how to start on costing for your social enterprise. The first topic looks at financial terminology for social enterprises. Social enterprises are organizations that sell products or services which aim to improve an area of society. While your aim is not to make money, it is an essential aspect of running an enterprise, even a social enterprise. To sustain your enterprise, you must ensure the enterprise, social or not, makes more money in a given year than you are spending that money. Understanding the basic financial language is the first step in managing your enterprise's finances. The money that the organization receives is referred to as income. The money that is spent on the running of the organization is referred to as expenditure. These are terms used commonly in business. When an organization's annual or yearly income is greater than the annual or yearly expenditure, that is referred to as profit or surplus. When an organization's annual income is less than the annual expenditure, that is referred to as a loss or deficit. While these terms may vary between social enterprises and other enterprises, they can be used interchangeably as they mean the same thing. As the notion of a social enterprise is only starting to become understood, it is best to use language that suits your needs. However, the goal is still the same. Social enterprises aim to generate funds from selling a product or service and to make a profit, not a loss. Sometimes we can shudder at this notion, particularly if you're more focused on the social impact. However, even charities must earn more money than they spend. Profits are essential in order to continue running your organization, to grow your organization from strength to strength, and to continue to have a social impact on your target community. Starting out, there are a number of other financial terms you'll need to understand. Cash flow refers to the money coming into the organization and the money being spent. Your revenue is the total sales of your organization. It can be calculated by multiplying the price of one unit by the number of units sold. Your organization's fixed costs are costs that don't change depending on the number of units sold, and these include things like rent, salary, insurance, and taxes. For example, if you sell 50 units in year 1, you will only require materials to make and deliver on 50 units. However, if your units sold increase to 100 in year 2, so will the cost of making and delivering on 100 units. But if you sell 50 units in year 1 and 100 units in year 2, the cost of rent wouldn't increase or decrease. Organizational costs that do change are referred to as variable costs. These can change based on the number of units sold, as we just mentioned. For example, packaging, utilities, and materials will increase if we have to make 100 units in year 2. The point at which the total cost and total revenue are equal is referred to as break-even. Understanding what each of these terms mean is a good start. However, this list could go on and on. Don't be afraid to create a list of terms and add their meanings as you come across new ones. Keep this list close until you feel comfortable with the new terms. The second topic looks at how to determine your costs. Whether you have set up your social enterprise or if it's still an idea, it is fundamental to the running of your organization that you have outlined your costs. The type of cost your social enterprise will incur needs to be understood. Knowing how to manage, record, and account for your costs will ensure you can sustain your social enterprise from the beginning. Your first step when determining your organization's finances is to identify your costs and organize them into fixed assets, variable costs, and fixed costs. It is important to be aware of these types of costs when building your financial plans. Sometimes a unit cost can be both time and an individual product. We've discussed fixed and variable costs already. A new term for your social enterprise dictionary is fixed assets. Fixed assets refer to the one-off purchases that can be used generally for more than 1 year, such as equipment, land, or buildings. Working out the actual cost of your product or service is important to ensure your budgets are correct. When you're trying to work out costs, aim to use the true cost of your materials. When pricing materials, aim to use the price of the materials before a discount or outside of a promotion. Determining the cost of your product or service must start with answering this question. How much do I need to charge the customer just to cover the cost of the organization? It is very important to make sure that you are being realistic in the time and effort that it takes to manufacture a good or provide a service. The cost of time should be factored into this. To calculate the actual cost of a product, we add the variable costs and the fixed costs. If you are manufacturing products, the actual cost calculation might look like this. First, we must calculate A. A is the actual material cost, which can be found by multiplying the number of units of materials used by the unit cost. Next, calculate B. B is the actual labor cost, which can be found by multiplying the labor hours used in production by the wage paid per hour. Next, calculate C. C is the actual overhead cost, which is calculated by adding together all of the overhead expenses, such as electricity, rent, insurance, and so on. Finally, to calculate the actual production cost per unit, add A, B, and C together and divide by the number of units produced. In this slide, you will see an example of the previous calculations. The fixed costs, including rent, tax, electricity, and insurance, when added together equal €1,500. The variable costs, including raw materials, fuel, packaging, digital advertising, and distribution, when added together equal €4,225. The actual cost, which is the sum of the fixed and variable cost, equal 1,500 plus 4,225 for a total of €5,725. To determine the production cost per unit, we now calculate this by dividing the actual cost by the number of units. In this example, the number of units sold is 500. So in order to calculate the production cost per unit, we take the actual cost of €5,225 and divide it by the number of units, 500, which gives us a total of €11.45 per unit. At this point, you can also start to think of the profit you are likely to make. This should factor in the information you have gathered during the market research. Taking the production cost per unit, you can then add your profit amount. For example, From the market research, you have determined that the customer is willing to pay approximately 20% more than your production cost. Therefore, you can add 20% to the production cost to get your selling cost. Calculating the actual cost if you are providing a service looks a little different. How you calculate service costs can depend on your business, service provided, and the industry. While you may have to adjust some of these steps to suit your needs, here are some general steps you can follow. First, compile your fixed costs. Then, assess your variable costs. Then, decide on a unit to measure. Note that the unit you measure likely depends on your industry and the service costing interests. For transport companies, cost per mile driven might be an effective data point. For hotels, the cost per hour of cleaning service may be another. Determine your unit cost using the same formula. Unit cost equals total costs divided by the number of units. For example, if a hotel wanted to determine the unit cost for cleaning hours, they could add labor costs, equipment costs, and supply costs, then divide by the number of hours spent cleaning. For example, €60 plus €2.16 plus €3.12 divided by 4 equals €16.32. So their unit cost in this case per hour is €16.32. Before we take a look back on this lesson, let's take a moment to put what we learned into action. Using the table on the slide, take some time to write down the actual cost of running your social enterprise. Research costs and use estimates where necessary, but try to identify as many of your costs as possible. Finally, to conclude the first lesson of our financial journey, let's revise what we have discussed. In summary, to sustain your enterprise, you must ensure the enterprise, social or not, makes more money in a given year than it is spending. If the annual income is greater than the annual expenditure, that is called a profit or a surplus. If the annual income is less than the annual expenditure, that is called a loss or a deficit. Working out the actual cost of your product or service is important to ensure your budgets are correct. The actual cost is the sum of your variable and fixed costs. How you calculate service costs can depend on your business, the service provided, and the industry. Keep a list of financial definitions until you are comfortable using them in conversation. Looking forward to seeing you again in our next lesson.